This chapter is relate with the pay for performance and financial incentives. Discover the part of Gary Dassler book of the compensation. When we're talking about pay for performance and financial incentives, so first we have to look at the incentives plan and the financial rewards which paid to workers whose production exceed a predetermined standards. For financial incentives, we have to decide some standards, and workers and employees have to achieve those standards which earlier defined by the employer. Frederick Taylor once says is popularized scientific management and use of financial incentives in the late 1800s century. Systematic soldiering, the tendency of employees to work as slowest pace possible and to produce at the minimum acceptable level. So based on this thing, the organization has to talk about for the financial incentives. Until and unless we cannot give the financial incentives to the employees, they will not work to the 100% in the organization. Law of individual differences, the fact that people differ in personality, abilities, values, and needs, and we need to realize that every person, every individual has a different capabilities, and they have a different needs, and they have a different values as well. So we need to understand this thing. Second thing is different people react to different incentives in different ways. For some particular individual, financial benefits are more important. For some individual, non-financial rewards are more comparatively important. Yes, matter it's depend on people to people. Manager should be aware of employee needs and fine-tune the incentives offered to meet their needs. Money is not only the motivator. This is very true. The other thing is we can talk about the relate with the Abraham Maslow's hierarchy of needs, five increasingly higher level needs: physiological, security, social, self-esteem, and self-actualization. Physiological is based on the food, water, and sex; security, safe environment; social relationships with others; self-esteem, a sense of personal worth; self-actualization, becoming the desired self. Lower level needs must be satisfied before higher level needs can be addressed or become of interest to the individual. Other thing is the Herzberg's hygiene motivated theory. Hygiene's extrinsic more job factors, inadequate working conditions, salary, and incentive plan can cause dissatisfaction and prevent satisfaction. This is the external factors related with the job. So salary, incentives, they have a kind of a approach where an employee always be satisfied, and they have a preventive satisfactions towards these mindset. Motivator, intrinsic job factors, job enrichment, challenging job, feedback and recognition. These are the factors which are very much the internally factors, intrinsic factors that you are motivated and you need to work for the job and you have a challenging job, higher level self achievement and actualization needs. These are the intrinsic job factors. Extrinsic job factors is totally related with the working conditions and your salary. So these are the hygiene factors. Motivating is a job, is a challenging job, and you are moving uh, for forward to a specific objectives, and that is related with the intrinsic job factors. The best way to motivate someone is to organize the job so that doing it helps satisfy the person's higher level needs. Other thing is the needs and motivation. According to Edward, intrinsically motivated behaviors are motivated by the underlying need for competence and self determination. Offering an extrinsic reward for an intrinsically motivated act can conflict with the acting individuals. internal sense of responsibility. Some behaviors are best motivated by job challenge and recognition, others by financial rewards. So these are has a different mindset and a different tendencies. Instrumentality and rewards, Bloom's expectancy theory. A person's motivations to exert some level of effort is a function of three things. Expectancy, that effort will lead to performance. Instrumentality, the connection between performance and the appropriate reward. Balance, the value the person places on the reward. These are the three important things which relate with the Bloom's expectancy theory. Expectancy, number one is that the effort which lead to performance, what sort of the effort you put in for the performance. Instrumentality is the connection between performance and the appropriate reward. But what you are doing it and what you are achieving it in the organization, in the response, what you are getting it, that is the instrumentality. The value is the value of the person's places on the reward. What has the significance value of the reward for an individual? So they what they have given. In other terms, if you read it, the Vroom's expectancy theory. So instrumentality is also that how you work for a certain job, for a certain how you use the tools to achieve that performance. But that is related with the reward as well. For instance, like some people is very much comfortable in doing their tough jobs, are doing a very technical jobs. They are enjoying their jobs. What they are getting it, what they are receiving it, they have linked with their job as well. And balance is that how much you have the value for the reward. For some people, 5,000 raise is not valuable. For some people, 10,000 raise is valuable. So they have a different people has a different value for the reward as well. If someone is giving you a yearly raise of 10,000, so you say that it's not add value to my individual life. So this is very much important in a motivation, and equation is motivation is equals to E into I into V. It's a product. E is into product of I and the product of V. If any factor E, I, or V is zero, then there is no motivation to work toward the reward. So overall motivation is will be equals to zero. If any one of the element in this area is zero, so the whole equation will be zero. Imply confidence building and training, accurate appraisal and knowledge of workers' desired rewards can increase imply motivation. Types of incentive plans, pay for performance plans, variable pay, organizational focus, a team or group incentive plan that ties pay to some measure of the firm's overall profitability, variable pay, individual focus, any plan that ties pay to individual productivity or profitability, usually time as one-time lump payments. So variable pay, organizational focus is a team or group incentives that ties to pay overall profitability, and the variable individual is for the individual productivity or profitability. So they have to give them in a one-time lump sum payment amount. This is for the individual and this is for the organization. In most of the sales organization, they have this group focus. In the individuals, they have a lump sum amount payments to the individuals in the organization. Then the other thing is pay for performance plans, individual incentive recognitions programs, sales compensation programs, team group based variable pay programs, organization wide programs, executive incentives, compensations programs. These are the different programs that is also related with the incentives plans. Piece work plan is very important. You need to learn this piece work plan. The worker is paid a sum called a piece rate for each unit and he or she produces. This needs to understand what does it. And piece rate basically this straight piece work is mostly work in the manufacturing organization. How much an individual produce in a one period of time. So it's based on a piece rate. How many pieces you produce, are you manufacture in the organization, in a company, in the firm. So you will get the benefits based on your piece rate. For example, if you produce 100 units in a one day, so you will get for the 100 pieces you have produced in the manufacturing organization. That straight piece work is mostly work in the manufacturing organization. This is keep 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 this thing in your mind. Other thing is standard hour plan. Greater worker gets the premium equal to the percent by which his or her work performance exceeds the established standard hours. So the extra additional work you have in the organization, you will get the additional benefit or the additional incentive plans for the for your work. So that is also has model for the manufacturing organization, for the service organization, like you can say it at hotels, you can say it at hospitals. These are some of the areas where this kind of a plan can work. But the job, like the teaching jobs and some academia and some other jobs, which is the hour based jobs, so that is not more probably cannot give the additional for the additional hours, give you additional hours payments to the individuals in those particular jobs. Pros and cons of the piecework: easily understandable, equitable, and powerful incentives. Imply resistance to changes in standards or work process affecting output quality, problems caused by an overriding output focus, possibility of violating minimum wage standards, imply dissatisfaction when incentives either cannot be earned due to external factors or withdrawn due to lack of need for the output. Merit pay is, you can ignore this part for the examination point of view. That cannot be very much important for the examination point of view. Individual incentives plans is the merit pay, a permanent cumulative salary increase the firm awards to an individual employee based on his or her individual performance is a merit pay. So it's very much clear to from the statement as the cumulative salary increase in the firm is basically a merit pay. Merit pay options is annual lump sum merit raises that do not make the raise part of an employee's base salary. Merit award tied to both individual and organizational performance, which is also related with the merit pay options. There is some others plans which is the optionals to the employees, and they have vary from one organization to another organization that do not have the plan which is related with the other part of the employees related with the work and related with the working. So, and then the annual lump sum merit pay raises that do not make the raise part of an employee's base salary. Merit award tied to both individual and organizational performance. Some others options are also available to the employees for their base salaries and raise in the base salary, and they have the work related with their merit pay options for the individual incentive plans and the others particularly focused areas, we can say that. Then the others part is the individual incentive plans, incentives for professional employees. Professional employees are those whose work involve the application of learned knowledge to the solution of the employer's problems. So for the professionals employees, we have a different incentive plans, lawyers, doctors, economists, engineers. These are the others professional employees. We can say that links to the employer's problems, and then they have the professional salaries
comparatively more salaries than the normal non-professional employees. Possible incentives is the bonuses, stock options, and grants, profit sharing, better vacations, more flexible work hours, improved pension plans, equipment for home offices. These are the different possible incentive plans for the professional employees. Apart from the professional employees, these are the incentives that can also be applicable for the non-professional employees as well. Recognition-based awards. Recognition has a positive impact on performance either alone or in conjunction with financial rewards. Combining financial rewards with non-financial ones produce performance improvement in service firms almost twice the fact of using each reward alone. Day-to-day recognition from supervisors, peers, and team members is important. So, which we can say that related with the uh, in the reward plan as well. Next is the you can online award programs offered by online incentives firms that improve and expedite the award process. A broader range of awards, more immediate rewards, some online award programs that can be based on the online incentives forms that improve and do proceed for the process that the remote jobs and the others organization who are doing jobs online, so they have such kind of the facility. Information technology and incentives, enterprise incentive management software that automates the planning, calculation, modeling, and management of incentive compensation plans, enabling companies to align their employees with the corporate strategy and goals. So these are also very much related with the incentive plan. That this is basically a full program, and that program is related with the compensation plans, basically. Next one is the salary plan, straight salaries, best for prospecting, finding new clients, account servicing, training customers. Salesforce are participating in national and local trade shows. Commission plan, pay is only a percentage of sales, keep sales cost proportionate to sales revenue, may cause an neglect of non-selling duties, can create wide variation in salesperson's income. Likelihood of sales success may link to external factors rather than to salesperson's performance, can increase turnover of sales people. Commission is basically the percentage you can give to the employee in a sales organization. How much you sales have perform in the organization, and based on that sales, you get a commission on and that sales plan. The for instance, like if you have did the 1 lakh sales, so you will have a commission plan of 40%, if we can say that. So you will get 40,000 for 1 lakh, we can say that. So this is a commission based sales programs for the organization. Then the other thing is relate with the other part of the combination plan, and then specialized combination plans, and the other sales quota plans, and team or group incentives plans. We can say that. So this is also related with the uh, other part of the benefits, but we can cover up the the this commission plan and then the combination plan. Pay is a combination of salary and commissions, usually with a sizable salary component. Plan gives salespeople a floor safety net to their earnings. Salary components covers company specified service activity. Plans tend to become complicated and misunderstandings can result. So this is a combination of the plan. Commission plus drawing, account plan, and commission plus bonus plan. And then a team or group incentives plan, a plan in which a production standard is set for a specific work group and its members are paid incentives if the group exceeds the production standard. So this is a team group variable pay incentives plans. Others is comparatively a different planning. So we can cover up the others part in the next part of the video, and you will cover up for the examination as well. For this, for first part, this is end. And if you have any questions, please ask from me so we can discuss it.